Thank you very much, Jonathan, and thank you very much for already providing some insights on what I'm going to be talking about in the next 20 minutes or so, which is to add some more detail and insight on what we're seeing in the region from a numbers perspective, from hotel performance, from supply growth, demand growth. But before I get into the numbers, there's just two themes that I'd really like to touch on, and they're really important for understanding everything I'm about to present through. And those two themes are, number one, the Middle East is a developing hotel market. There has and will continue to be significant supply increases in the region. And as a result, there will be growing pains. There will be years where demand and supply is imbalanced and there's pressure on performance. That being said, when I first came here 12 years ago and I heard the phrase, "build it and they will come," I listened to it with a great deal of skepticism. But the reality, as you will see, is that it has been built and they have come. So I wouldn't bet against that in the future. The second key theme is relativity. And this is a theme I'm really passionate about in life in general. And that is, we as humans are built to see the world in a relative way. We measure everything in life, from our own happiness to everything else, relative to what we had in the past and what we see around us. And it's no different when it comes to hotel performance. If you have a great year at one of your hotels, you want to see that repeated next year, and with even an improved performance on top of that. And that's not always possible. So that means even when there's performance declines, it's important to understand how that performance is relative to what else is out there. So with that, what I plan to do is first take you through a bit of a global performance picture to give you some insight on the wider hotel investment and performance market across the world. Then dig into the Middle East, where we know there have been some challenges, and analyze those a bit further. Then there's something different, given where we are. I want to spend some time looking at resort markets in the region and where we've seen some real positive trends. And finally come back to the UAE as a whole and really drill down on what we're seeing here. Before I do this, I just do a quick sense check of everybody's sort of understanding of really where hotel performance is across the region. So who would say that last year across the Middle East, hotel performance was up? Put your hands up if you think hotel performance is up last year. 3. And who would say that hotel performance across the Middle East was down last year? Yeah, so everybody thinks it was down. And you'd be right in one aspect. But probably the most important aspect is on this slide here. And you'll see here that actually, if you look at demand for hotels, the number of people that are staying and spending nights in hotel rooms is actually up across the Middle East by 4% last year. In a year where we had all those challenges, hotel demand in the Middle East there was up 4%. And actually was up everywhere in the world. It was a unique year, 2017, where we saw hotel demand grow unilaterally pretty much everywhere. The only difference with the Middle East there is that second blue bar, which is hotel supply. So hotel supply grew faster in the Middle East than pretty much any other region in the world. And that is why when you look at the number that you're probably all more familiar with, which is RevPAR change, you can see the Middle East there did have a negative year. It was down 5%, whereas the rest of the world was positive, mostly because they didn't have as much supply coming into the market. So just quickly touching on the slide, I'll start with North Africa. You can see some huge growth there, and that really is underpinned by Egypt, and in particular Cairo, where there was strong recovery off a pretty low base, primarily as a result of the devaluation of the Egyptian pound, which was cut in half by value last year. If you take that out the picture, I think a really interesting thing is looking at the top there, and you can see Europe, almost 6% RevPAR growth, has the highest RevPAR growth out of any region in the world. It's not often that you can say Europe is the highest or fastest growing region in the world. So that is something interesting. And I will just start on Europe to give a bit more detail. And the reason for that is you can see pretty much across all the major markets, some strong RevPAR growth, east to west, north to south, really only Switzerland in the middle struggling because of the strength of the Swiss franc there. And this is a really interesting slide to take away because where we've got to now is that hotel occupancies in Europe are now 10% above where they were in the previous peak in 2008. That's pretty remarkable when you think that over that period, we've had about 10% supply growth of hotel rooms. We've had the disruption from the sharing economy and Airbnb. We've had a number of terrorist attacks and political safety concerns around the region. And despite all of those headwinds, we've still seen significant growth in hotel occupancies. Rooms and hotels are fuller than they've ever been. And the main reason for that is now been 7 years of very limited supply growth, around 1% a year, and pretty good consistent demand growth each year. And when you add that up over the 7 years, that's what's driven the performance levels we've seen. And that's why RevPAR has been growing strongly and why we expect it to grow again this year, probably 5% or more across the region. Looking at North America, slightly different perspective. Their recovery started faster than Europe. And they're coming up now to almost 100 months of consecutive RevPAR growth. That's 100 months in a row where RevPAR has grown, which is pretty remarkable. Now, a year ago at this time, there was a lot of concern that the policies from Trump, both from an economic perspective and from a travel perspective, were going to cause that to blip. The reality, though, over the last 12 months is that has not proven to be the case. Supply growth has remained relatively constrained, below 3% there, and the strength of the underlying economy has helped demand to grow. So you can see there, 2017 was positive, and we expect it to be again in 2018. Moving across to Asia Pacific, 2017 an incredibly positive year there, primarily because for the first time in 3 or 4 years, we've seen demand growth pick up and supply growth slow down. And so pretty much across the region, we've seen strong performance. Really only 2 countries showing declines, South Korea because of the tensions with North Korea, and Singapore because of supply growth. But other regions that have had a tough 3-4 years, like China, had strong years, almost 5% RevPAR growth. India, again, has had a tough 3-4 years, up to about 4% RevPAR growth. So strong growth there. So really just to cap that off, I think the key takeaway here is that when you're in a region where you are seeing negative performance declines, it's easy to get stuck in that, maybe the hotel sector is one that's not going the right place. Maybe these disruptors like Airbnb do represent a fundamental challenge. And what I just put to you is the data is not proving that out. Yes, they obviously represent risks. Yes, these challenges are there, but the fundamental demand drivers for travel are so strong that they're overcoming that. If you look at 10 years ago, everybody's concerned that technology, video conferencing was going to take away people's need and desire to travel, and that has just not proved to be the case. And I do not think that will prove to be the case in the years to come. So we are working in what is a fundamentally strong sector. So just on to the Middle East. Now, I guess it's no surprise given that, that supply growth that there has been some negative RevPAR in the Middle East. I think what's more surprising is that the decline hasn't been worse. I actually think it's been an incredibly resilient region because when you look at the 3 things that you need to worry about when it comes to hotel investment, the risk of economic downturn, safety concerns of political unrest, and supply increases, the Middle East has had all of those 3 things in the last 3-4 years. Starting with this picture, whilst there hasn't been a recession in the Middle East, we have seen a decline in oil prices. Certainly, the weather is not something that those destinations have in common, but a reliance on oil as a driver of economic activity is what they have in common. And when you look at this graph, you can see how RevPAR has been correlated, not just in the Middle East, but in those markets like Houston and Aberdeen to the oil price. So there is really good news in the sense that, yes, whilst oil is not back up to $100, it has recovered this year. Maybe we were listening to the economist earlier that we shouldn't count on that continue to remain strong, but the fact it has recovered is a good thing. That should help demand growth, together with the fact, importantly, that there has been a lot of dollar weakness. So the dollar devalued about 10% last year versus a weighted bunch of currencies, and it's a further 3% this year. And that means this is a cheaper destination for people to come to, and that will drive demand and pricing power for hotels in the region. That being said, supply has been an issue. You can see now that we're into our 4th year where supply growth has been in excess of demand growth, and as a result, RevPAR has been declining. That is likely to continue again this year. And that's because, certainly if you look to 2018 and all the way through to 2020, our pipeline shows about 100,000 rooms that could open. Now, all of those will probably not open. There will be delays. But that is still a huge amount of potential supply coming in. And just to give you an idea, to fill all those extra rooms, you would need about 42 A380s coming and landing in the region every day to fill those rooms. Now, the good news is Emirates itself has about 45 on order over that period, so there is extra capacity coming in. However, the trick is obviously getting everybody to get off the plane and stay for at least 4 days, which is a bit more challenging. So do expect supply to be a continuing story. The important thing about supply, though, is it's not the same everywhere. Here you can see supply growth in 2017 across some major destinations. And you have places like Abu Dhabi where supply growth was only about 3% compared to here in Ras Al Khaimah where it was almost 9%. So it does definitely differ by destination. And it will continue to differ by destination. So I won't go into these in great detail. If you are interested, we do have another session where we can dig into the supply changes by market in more detail, if you look on your agenda. But it will differ. And importantly, even within those markets, you can see supply growth differs by sub-market. Looking here at Dubai, the huge areas where supply is coming through is Business Bay and around the Palm. Huge amount of projects there. And what we've seen in performance is that does impact the performance of that sub-market. So knowing when and why supply is opening up is important. Just adding on to that, it's not just about where the supply is opening, but what supply is opening. We heard a lot of talk about the potential for mid-market hotels. The reality is, in our databases at the moment still, there is very little supply that's coming through in the mid-market. Out of the 70,000 rooms we have in Dubai, only about 20,000 are less than upscale to luxury. So still, with all the talk of the opportunity, and I do think there's opportunity, that's not yet reflected in the pipeline that we're seeing. So I guess unsurprisingly, when you look at hotel performance across the major markets, 2017 was a tough year. A few little bright spots there, but mostly around recovery. Cairo, I've talked about, Beirut and Kuwait, all coming off some low bases, but really a lot of red there. But what I would say again is, given all those supply increases, you look at places like Dubai and Abu Dhabi and Ras Al Khaimah, really to have RevPAR declines of only around 3-4% is a remarkable achievement. Looking at some of the smaller secondary markets, there have been some that have been had less negative impacts, less supply growth, places like Sharjah, Ajman. But then there's others that have had more. Al Ain, a huge supply increase last year, meaning RevPARs went down 25%. This year has started a bit more brightly. Again, we've seen some red there, but there has been some stabilization in markets where there hasn't been as much supply growth. And certainly here in Ras Al Khaimah, we're seeing a positive start to the year. So in conclusion, the Middle East is a developing hotel market, and it has been a challenging 3 years, but it remains a very profitable one overall, which is why people are building more hotels. And there are some green shoots and some positive things to think about in terms of the oil price recovery and the weakening of the dollar. So just quickly on to resorts. Resorts have had a really, really strong period across the world in the last 3-4 years. If you look at the Mediterranean, performance there is up some 50-60% over that period. And the Gulf and Indian Ocean has some amazing resort markets. So I'm not going to pick for you, and in the next couple of slides, I'll let you have an idea about which ones you might pick. And just going through some key metrics, looking at occupancy, you can see some really strong occupancies across the region. Looking at the top 3, Dubai, Ras Al Khaimah and Mauritius, all up there over 75% occupancy, which is incredibly strong for resort markets. From a rate perspective, I guess unsurprisingly, the Maldives, the nature of the product out there, has by far the highest average rates. Dubai not too far behind, and this is a select set of Dubai resort hotels. It's not the whole market. And Seychelles all getting over that sort of $300 mark, which should drive high levels of profitability. And from a long-term performance perspective, I think what you can see here is that these have been relatively stable and growing markets in terms of performance. There's a couple exceptions there, but you have the Goa, Mauritius, and Maldives. Those are very much developing destinations. Mauritius not so much, but strong demand coming through, driving increases of almost 40% of RevPAR over the last period of years. And even in places like Ras Al Khaimah, where we've seen that big supply growth, performance has been relatively stable throughout the period. So it's been able to show the resilience to absorb the supply growth and continue to be a strong market. So, resorts is definitely one of interest. Obviously, one to be careful of in terms of exposure to wider economic fluctuations, but it is a strong period for resort markets around the world. So finally, just coming back to the UAE. And I think this slide is really a remarkable slide of data. Going back to the point I was making in the beginning about build it and they will come, here is the statistical evidence that has worked. Because in the last 10 years, the number of rooms, the supply of rooms in Dubai has doubled. Right? That teal line at the top there has doubled. And the demand, the number of people staying each night, has also doubled. So what's happened is, despite all that growth, we've been able to attract extra people staying in the hotels to deliver the performance of that. Now, the green line, which is RevPAR, you can see hasn't tracked that. And I think the reality is those days of 2007-8 were rather spectacular and are probably unlikely to come back again. But what we are seeing is, those are still relatively high levels of RevPAR when you compare to the rest of the world. The Middle East and actually the UAE has RevPARs on average, which are between 30 to 50% higher what you see in Europe and the US. So with all of that demand growth, what we have seen is Dubai as a destination has really come to the fore. I'm surprised this isn't known more widely within the region, but Dubai is now the fourth most visited city in the world, higher than New York in terms of overnight stays. And that's pretty spectacular. So I think, in terms of the vision that was set out there, it's certainly being achieved. And if you look over the last 7 years, since 2010, despite all that supply growth, this goes into the different Emirates here. You can see that across all of the Emirates, pretty much, despite that supply growth, occupancy has continued to be stable or to grow. Really just the one exception there, which is Al Ain, because of the big supply growth that came in 2017. So here's an interesting one, which really surprised me when we pulled the data the other day. And it's where we look at compression nights. So number of nights where hotels are over 90% occupancy. And the reason that's important from an investment perspective is those are the nights where hotels can really push rate premiums. And I would have expected the number of compression nights, the number of nights each year where the hotel markets are over 90% occupancy, to be down over the last 7 years. And the reality is it's not the case. You can see there Abu Dhabi, Ras Al Khaimah, Dubai, all having some significant increases in number of compression nights. And the reason that matters is because that's the average rate premium that hoteliers drive on those nights. It is 41% more expensive to stay in Dubai on those nights where hotel occupancy is over 90% than other nights. That's because of proactive yield management. The other thing just to point out here, was an interesting one, is you would think that all hotels in a market move in generally the same direction. RevPAR in Dubai was down about 4% last year. You would expect most hotels to be down. This data shows you that's absolutely not the case. Individual hotels do outperform and underperform the market. A huge range between the occupancy and the rate change that hotels have been able to achieve. And the final thing is just, obviously, rooms revenue is important, but total revenue is even more important. And what we saw last year was, and here looking at Dubai and Abu Dhabi, is that even though RevPAR was down, F&B revenues had a pretty strong year, and as a result, total revenues were up in those hotels. So the importance of F&B is clear and understood in the region and should not be forgotten. So looking at the UAE then, yes, it's been a tough 3 years. Yes, there's been a lot of supply growth. Yes, everybody's been under pressure. But I think it's done remarkably well as a region in terms of hotel performance. And that when you look at that diversity of performance, that don't forget that hotels are operational assets. You know, their success doesn't just happen by itself. You need good teams, good management teams, good revenue management driving performance, because hotel performance does differ on a hotel-by-hotel basis. And with that, I don't know if we have time for any questions, one or two.
I've got a question for you.
Yeah, Jonathan?
If we don't have anyone from the audience. Okay, so build and they will come, but we have never seen the likes of what's going to take place over the next couple of years, with about a 50% increase in supply against existing supply. What is it, 350,000 in the Middle East, and we've got to look at around 160,000 coming in?
Yep.
Are you, what's your view on that? Because I don't think that's ever happened before in the history of the industry.
Well, I'm not sure to say it's never happened before. I think we were facing a very similar picture back in 2007 and 8. I mean, as I just showed you, in Dubai, supply has doubled over the last 10 years. That's 50% every 5 years or so. So, you know, the region has demonstrated it can absorb supply, and I think a lot of that comes down to you know, what Keith Barr was saying earlier, which is the great strength that the region has is its ability to react quickly in terms of building infrastructure. This is not just about building hotels, it's about building everything that goes with that to get people here, to attract them, and to retain them here. And so I think, you know, I would say I expect it to be some tough years, but what the region has proven it's able to do is to really build the surrounding infrastructure to achieve that. So
okay.
I think certainly in Europe they could learn a thing or two about that.
Okay, all right, good. I'm just trying to pick up from Stephen Sacker, you know, in terms of hard talk.
Exactly.
You know, trying to build on those plugs. But anyway, is there any other questions for Robin Rossmann? Robin, thank you so much. Always insightful, always interesting. Thank you very much.